Hey all, welcome to ShareTreck. It's the 18th of May 2022. We had a fantastic first 2 days of the week so far. And right now there seems to be a bit of a hiccup in progress. So we'll investigate all that in today's session of CRISPR Daily Update. So let's get started. So we have a mixed news scenario developing in the markets. The first one is that Walmart and Target both have disappointed. I was watching Jim Cramer yesterday. He was absolutely disappointed with Walmart, and he was saying that the Walmart executives have paid a lot of money to figure these things out, and that his faith in Walmart was misplaced. And he was hoping that Target and Home Depot would do better. Home Depot definitely did better, but Target also disappointed. Walmart dropped 11% yesterday, and things are not looking that great when you start looking closer into the supply chain issues. And then Fed Powell came out for good measure, and he mentioned that there'll be more pain before things could get resolved. And he also claimed broad support for 2 more 50 basis point hikes. So the market started pairing the gains before picking up again at the end of the day. Meanwhile, Warren Buffett has started buying mostly in energy after selling Wells Fargo. That's my opinion after looking at his purchases. And the fact that Warren Buffett has started buying could probably indicate that maybe he feels that the bottom is already in, and this could be the right time to start buying. So he's got out of Wells Fargo, which has been a problem child for quite a while. Berkshire Hathaway has always been a fantastic performing share. So Warren Buffett is someone that we can watch and probably take cues on. So I think probably the market bottom will come in very soon, or we're already there. I'm expecting a consolidation movement. I'll talk about that in my Nasdaq analysis in a few minutes. CRISPR Therapeutics, there is rumors that there could be a takeover or merger of CRISPR Therapeutics, and that's the reason why CRISPR shares are firming up. So this is another area that we need to watch for, because CRISPR Therapeutics, in my opinion, is a very well managed company, and it has got a lot of pipeline assets. So very, very strong. Big pharma can come and pick it up and become much stronger. So we have to watch what's happening in this area. So whoever owns CRISPR Therapeutics, I think, is in a good wicket right now with this kind of talks going on. It's all market rumors. We don't know what is true or not, but most of the time there is no smoke without a fire. So let's keep watching what happens in this area and take some actions at the right time so that we can benefit from it. And then looking at the state of the markets, unfortunately, I'm not able to give you a much better image of this graph. Probably those of you who are looking at it through smartphones might not be able to make anything out of it, but I just want to describe it for you. This diagonal line, these zigzag violet lines out here, which I'm moving my cursor on, that is the VIX. It is the most volatile line, and we had started looking at a kind of diagonal line of resistance out here as it went up and started coming down. Now we are looking at a diagonal line of resistance which is trying to push it down. So yesterday when I was looking at this graph, we did not have this second spike out here. So this second spike makes me think twice whether we are already on our way down or we are just consolidating on our way up. So things could go either way, and today the VIX is up slightly. So we'll have to watch this carefully, because after 2 days of gains, there's a good chance that today we might lose some of those gains. S&P 500 is still the best performing among the lot, and the IWM, which is Russell's iShares 2000 ETF, that is the worst performing of the lot, and Nasdaq is the next worst performing from there. So we can probably expect that when the market turns around, Russell and the Nasdaq will be the first ones to lead the pack out on the race. So with that said, let's go and have a look at our Nasdaq, VIX, and other indicators and do some technical analysis on them to see the direction of the market. Let's start off by looking at our Nasdaq futures. And before I do that, let me move myself to the other corner so that you don't you get to see the pricing and other things on the on this side, this corner of the screen. So I'm going to just pull this CRSP pricing chart a bit up. Okay, so we are in Nasdaq futures, and Nasdaq futures is down 1.48%. Each of these candles is a one-day candle, and as you can see, whatever gains we had yesterday, part of it has been wiped out by the Nasdaq futures today. Let's go and look at the indices. So we have the first bearish sign out here. Let's look at the indicators. I'm going to go to put call ratio. Put call ratio has gone back up. So I would consider that it's a marginal increase. And as of yesterday also, I was saying that we are almost in the neutral kind of area. This is slightly bearish at this point of time. So PCC also is indicating a slightly bearish approach. Let's look at what VIX is telling us. VIX has gone above resistance of 27.20, and therefore it's now got the 50-day exponential moving average as a support, and also the 100-day exponential moving average as support, and the horizontal resistance at 27.20 is now going to become a support. So it puts the VIX in a situation where it is bearish for Nasdaq. So VIX is also pointing us towards a bearish outcome for the day at this point of time. Let's look at the US dollar index. US dollar index is regaining some of the losses it had incurred yesterday and has bounced off 12,745. It is still being constrained by the 9-day exponential moving average. The MACD is also bearish, and the momentum, which had been in the oversold area day before, came down, cooled down a bit, and it's going up today. So I'm thinking that US dollar index shows that funds are coming back into US dollar, which will make the US dollar stronger. Therefore, gold and other assets like Nasdaq will have to probably pair the gains, because that's where the money will come from. We'll see it as we go ahead and look at gold and crypto and other assets. Now, if we look at our two-year yields, two-year yields are going up, and whenever yields start going up, it's bad for the stocks, especially the growth stocks. I'm going to mark the support here as, sorry, I made a mistake here. We have a support at 2.60%, and that still remains intact. And on top of it, now we have support from the 9-day and 20-day exponential moving average for the price action in the US 2-year yields. So it's not looking good for this stocks. Again, this is looking bearish. Now let's look at the 10-year yield. The same story is happening in the 10-year yield as well. But fortunately for us, we are still within yesterday's range of yield. So it's not going to make much of a difference. But if it continues going up, then growth shares, Nasdaq and biotech is likely to suffer. So with that said, let's go and have a quick look at our S&P 500. S&P 500 has managed to go above this minor resistance, had converted that into a support today. So this is a good positive for S&P 500. MACD is also in the verge of crossing over to the bullish side. It's still bearish, but it's on the way. Momentum has picked up halfway to average, so that's also a good sign. So there are positive signs on S&P 500. However, when we look at the pre-market action, it shows a fall of 1.23%. So if we were to keep track of what happened with VIX, what happened with put call ratio, and what has happened so far with our US dollar index, I think S&P 500 is reciprocating that pre-market by being bearish. Now, if we go to QQQ, which is our Nasdaq, again, Nasdaq is down 1.56% pre-market, and it still has got a support from 302.95, which is the red horizontal line that I'm converting to green right now. So we'll have to see how we perform. We are definitely going to fall below that. We are right now in pre-market stage at 301. So I'll have to end up converting these two lines into red lines once the market opens, but we'll see. We'll keep that for later. Now, if we were to come to look at Dow Jones Industrial Average, we have Dow Jones Industrial Average also having jumped on top of the minor resistance that we had. However, when we look at pre-market, we are looking at a drop of 0.9%. That's almost a 1% drop. in the index pre-market. So the MACD being bearish is tending towards the signal line in a bullish manner, and the momentum is recovering very sharply and moving towards average. So Dow Jones is trying to pick up, but all the other indicators that we have seen are bearish. So when the market opens, I'm expecting that we're going to have a bearish start for the market. Things may pick up during the progress of the day, depending on any stimulus that we get. But overall, all the risk and other factors that we had looked at before for the past 3 months, they still remain unchanged. And therefore, I think that we are going to be in for a bearish market today. And what I'm looking for is some kind of a consolidation. Let me explain what I'm looking for by using this diagram. And I'll take a pen from here, brush. What I'm thinking of is that we are going to come into some kind of a consolidation where we'll be moving among two ranges. And we have to see that happening before we can start buying. Once we see some consolidation, we can start doing some amount of swing trading where we aim to buy closer to the top and aim to buy closer to the bottom. So I'll be talking about that when the opportunity comes. But right now, we are not yet seeing the consolidation. So the moment we see the consolidation, we can say that we can start our swing trading activity. And even this consolidation, I'm thinking that it's going to happen, like for example, for a few weeks or maybe 20 days, we have a consolidation in this range, and then we go into consolidation in the next range, and keep moving. So this is how I'm thinking that the market is going to behave in the next two quarters. And the reason for moving from one level of consolidation and getting into the next level of consolidation would be the unraveling of one of the risks. The first risk, I think, which will unravel is the China lockdown risk. And when that happens, two factors are going to kick in. One factor is going to be that now there's going to be a relief in the supply of goods and the production is going to take place. Stocks like Tesla and Apple will start reacting because the market will start, the production can start and the market can be satiated. So that's a positive aspect for the market. The second thing that's going to happen is that China will start buying oil. So the oil prices will start shooting up. That's going to be a negative. So based on the balance of those two, we'll go into the next level of consolidation. How much higher it's going to be from the current level of consolidation depends on the offset between the increase in the price of oil and the relief felt by China reopening production and starting to ship back stuff to the US and other places. So that's how I think things are going to move for the next 2 quarters before we get a foothold and start moving. Because by the end of 2 quarters, I expect a whole lot of risks to be unraveled. One is that the Fed would have done its basis point increases and the results would start showing in the inflation, and Fed will become less hawkish. The second thing I'm expecting is that the China lockdown will be off and the supply chain would have resumed. The third resolution I'm expecting is the Russia-Ukraine war would have gone to a position where there is a resolution, because I don't think Russia can afford to spend $900 billion a day to keep on with this war. And the world community cannot sit silent watching innocent people being killed day after day, month after month in Ukraine. So all these factors are going to push through for a resolution in that area. And I'm also expecting that COVID would be a thing of the past by the end of the next 2 quarters. And that's when I expect that we'll get into a bull market. So this is my blueprint at this point of time based on my analysis of all the indicators that I see. With that said, let's go and have a look at our genomic stocks. Well, here we are with our genomic shares, and you'll see on the right side panel, I've sorted all these shares based on how well they did yesterday. Caribou Biosciences and IMTX did not do well yesterday, but all the other stocks in our watch list have done excellent. DNA is the top of the list at 12.76. And if I was to go into DNA and have a look at the share, we can see that DNA has done better in terms of converting the 9-day exponential moving average into a support. And today it's going to tackle the 20-day exponential moving average. With the MACD moving towards a signal line and momentum picking up, it looks good. However, the overall market sentiment is bearish. Therefore, DNA is going to have trouble holding on to gains. So that's my opinion at this point of time. And the objective of doing technical analysis on all these shares is to either help do some kind of day trading or swing trading, or to help do some kind of long-term investment. So from a long-term investment perspective, I think most of these shares are in a zone where dollar cost averaging would make sense. So there is no need for any special technical analysis at this point of time. And when you look at the short term, it is too volatile, and there's a risk of losing capital for day traders. So the next best option for us is to look at swing trading, and swing trading option has not yet arrived. Swing trading will arrive when we start oscillating between two levels and start consolidating sideways, or when we are on a bull channel. So neither of that has happened. So we are in the watch out for that. In the absence of all those, I think the next best thing we can do is to look at IDMA, which is the Genomic Shares ETF. And when I look at IDMA, I feel comfortable that it is still above this support here of this diagonal line. And there is a possibility that it can go up because the MACD has crossed over the signal line and become bullish. And also the momentum, which was at the very bottom 2 days ago, is now very close to becoming average, and it's poised to move upward in a rapid manner. It has moved up sharply. So if IDNA remains positive today, then all our genomic stocks are going to remain positive. CRISPR will definitely do stronger today because of the fact that people believe it's the front runner, and also because of the fact that people feel that there are rumors that some company or the other might try to take over CRISPR, or CRISPR might do some kind of merger. So we don't know. Rumors are always rumors until they are proven to be a fact. But right now, CRISPR is looking great with bullish MACD and above average momentum poised upwards. So CRISPR Therapeutics should do well today, regardless of what happens with the rest of the market. With that said, I don't have any forecast for any of these other shares out here. And with that, I would like to bring this session to an end. And if you really like this video, please press a like there. And if you are not yet subscribed, please subscribe and become a member of our channel and help us grow this channel for everything related to CRISPR and the stock market. And if you have not seen my earlier video from yesterday, that everything is related, please check it out, because I'm talking about how the food inflation is going to make its way to us. And already we can see that around 66 countries worldwide are in the verge of bankruptcy. And Sri Lanka is just got a day of fuel to buy. That's all they have in their foreign exchange reserves. They don't have food. India is giving some support to Sri Lanka, but that's a space to watch because it's a big enough country, even though it's not too big, but it's big enough to make a dent. So check out that video of mine, and I'll come and talk to you again tomorrow. Thanks and have a great day. Bye for now.